Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Thursday, September 11th, 2025. It is 11:10 a.m. Eastern Time, so I'm starting this video. What I'm going to do is just hit on some of the recently highlighted trade ideas, some providing objective entry, some hitting price targets today. Start out here with QQQ. As I mentioned, personally, I was going to suspend stops for the last 2 days, so they'll be reinstated today, which means unless we dump into the close and get down below or at least very close, hard dump might do the trick if we get close back to that 580 level. Again, it's still within a very reasonable RR from the initial short entry right here, where currently that trades down 1.65. Again, to reiterate, after already hitting the first target for a 2.6% profit, giving people a chance to recycle their cover, reverse, go long, profits, whatever, and still within a very reasonable RR, risk-reward ratio, to that T5 final target. So again, it was a tight stop on that at that time. And there's a myriad of possibilities of where anybody, assuming they're shorting the Qs, would have entry points. Now, again, I can't reiterate this enough. I'm going to go to some of the comments on the site, talk a little bit about that in 1 second, about just trading, the best. It's a due to the market breadth deterioration. Again, AI stocks leading the charge once again, the big tech stocks. It's a very bifurcated market with a lot of stocks, short trades playing out. And again, the longs that we've had, it's relatively not a lot, but we're batting, blowing away the market, with the long trade ideas that have been on individual stocks, individual commodities and things like that recently. So, that's part of trading a diversified portfolio. Your eggs shouldn't be in one basket. And QQQ, I say this a lot, although it's technically an index, it's so concentrated into tech and big tech due to the market cap weightings and just really the lack of diversity within the NASDAQ 100 index itself. Even if there were only 100, it's not like the S&P 500 where you have 11 sectors with broad exposure. Always something going up with something coming down, a lot of defensive issues in there. You really don't have that. You pretty much lack that in the NASDAQ. It's just a tech index. So it's just, again, it's trading one of those FANG ETFs is all it is doing. It's going to track that or the tech sector. All right, let's talk about some of the recent comments. Let me do this. Let me jump over to this this post right here, just because I already had the site pulled up. I wanted to highlight this trade, and I hate to bring it up in light of yesterday's shooting, Charlie Kirk. That's just there's no words for it. It's just awful. And now the latest thing from the Journal just came out. The ammunition had pro-transvestite stuff on there and anti-fascist stuff. They found some of the ammo, but again, that's kind of moot. In the reality of it is a couple takeaways here is that, hey, the charts are the charts, and I'm going to talk on that in a second. There's a reply I made to a recent comment about charts versus fundamentals. So one of the trades I've been highlighting, or it's actually paired trades, are two of the gun makers, and again, I'm not bringing this up. It has nothing to do with yesterday's shooting. It's a follow-up to a trade. I've been highlighting this one quite a bit. We went long here. I said there's a pretty good case I could make to go long. We were at nice support. This is the first video on July 15th. And in that video, and then I went on to do 3 more and gave you additional targets. I added another downtrend line in one of the follow-up videos here. Here, let me show you. Anytime you're wanting to see the previous posts on a trade idea or coverage of anything, just come down under the posts. I always tag what I've covered in the video. So if you go here, for example, and you click on SWBI, it's going to load them all. So I followed up even recently as one of my favorite longs, and it now has hit that first target. In one of those follow-up videos, I gave you this additional downtrend line. And again, as I state, I quite often, a lot of the trade ideas I covered are going to be provided in videos. So there it is. We hit that the 979 target, the downtrend line, that second downtrend line I added since, which comes in right here, and the 200 days. This is just a was a beautiful exit point this morning. You have the 200-day moving averages, which on so many stocks, not all of them, but a lot of them, define trends. Once taken out, like it was there, they become resistance, and you short rallies back into them, or you sell your longs if you're gaming counter trend bounces. So that's exactly what that was. So that was a very nice exit point, good for from where it was first highlighted and several times since, 18% profit. And that, on 1 out of 10, that's a 10 where to take some profits. And I've started getting my charts together this morning. I didn't have a price alert set on it, but just wanted to share that is the intersecting triple resistance. And the 200s, by the way, come in together. You pinch the 200 simple and exponential are pinching. And look, it's still a very constructive chart. It's going to probably take a breather. There'll be a lot of rhetoric for gun control. I don't want to chime in. I know it's a hot issue. I think we need more mental health control here. You're never going to take all the guns away. There's so many guns in the United States. You could literally cease production today, and unless you're going to go door to door, with military, and forcibly take it's not going to happen. So again, let's not. It's sad but true. These things tend to, because you get the anti-gun advocates ramping up gun control, and that usually these kind of shootings actually playing well to these stocks. Again, it's a sad but true fact. Again, this chart was based on both technicals and fundamentals, and I made in that video and the case for longer term bullish for Smith & Wesson, and then I followed up shortly after that. Ruger, even gave you price targets on Ruger, RGR, same thing. These are the two of the biggest U.S. gun makers, if not the two biggest. And like I said, there's some relaxed or rollback in regulations I mentioned in that video. I spent a lot of time covering it with the Trump's big bloated bill. A lot of people aren't aware. No longer, as of January 1st, you will no longer need to pay the $200 rake from the federal government for the tax stamp for either a suppressor, which is a silencer, or short barrel rifles. And both of these companies manufacture not only those, they sell suppressors, they also manufacture the big manufacturers of those type weapons that typically, whether it's a pistol or a long gun, that have the threaded barrels and take that. So they're gonna, there's that fundamental case, and I'm gonna loop back to that. I very much factor in fundamentals, especially in the longer term, trades. But technicals rule the roost, and I'm trying to recall where I highlighted this one for you. Well, you can find it by going like this. You go in here, resources, click on the search for the symbol tag, RGR, and that one would have been, no, what did I do? Oh yeah, RGR. Last time, these are older, that's 2013, so I guess started highlighting it here August 8th. And so August 8th was right here. So you made a quick 12%. Again, much better than what the stock market's doing, and much more what any that, if you've held the QQQ short, didn't book profits at T1, infinitely higher than the drawdown on that trade there. So again, I'm just trying to harp on the benefits of a diversified portfolio, asset allocation, security diversification, and being bullish, the most bullish. And again, these are brand names. Ruger's been around for years, generations. So is Smith & Wesson. So these are blue chip beat down companies, again, with a fundamental and technical case. And same thing with Ruger, by the way. It hit my first target today that I gave you in the videos, and also the downtrend line right there. So if and when it takes that out, T2, and I will most likely be adding additional targets. So I can might as well, because if we take out the downtrend line in the 200s, that's a big, and hold above them, as long as it's not a whipsaw. Yeah, I think there's a good chance we can come up here to that. So I'll make that T3 right now for you. All right, so there's those two. Now I'll return to the site, go over some comments, recent replies I've made here, go back home. Okay, so just the other day, I think it was right here, UNH final price target hit. Let's see, so Mike asks, with Buffett on board long term, would it be reasonable to hold on? You got us in before Buffett announcement. Here's my problem. This is important stuff. So Buffett's holding period is measured in years versus what is typically days, weeks, or months, depending on what the chart looks like on my trades, right? Swing trader. The case to stick with UNH, by the way, that's a reason if you want. Yeah, absolutely. Remember, the trade ideas I get here, I'll speak to the longer term fundamentals, and sometimes that's it. But rarely, we're gonna milk the easy money. We're gonna get the quick 20, 30% pop on something, and sometimes hold on. And I've hundreds of trades literally that've been triple digit winners since I've been running the site, 100% plus. So they happen, but those are usually explosive patterns. And normally, again, as swing trading is the primary goal of this site, we can get in. It was a bottom picking on that stock. It was, so if you want to hold on to it because Berkshire, Buffett's no longer running at the helm, but if that was his call before he left, yeah, absolutely. And again, the case was made in there that even though we hit my final target, I did have an additional with those dotted arrows, remember on the initial chart, of continued move if we got into that gap of up there. So I wanted to milk the easy money, which we did, and that was whatever the gain was for on that trade. We made a quick 30% profit. As I said in this post very clearly, the fact that we were in the gap opened the door, increased the odds we're going to go up to that target. So I said you could raise stops, let it run. And so again, that's a combination. The fundamentals were made if Buffett's behind it. Obviously, he's a fundamental analyst. He looks at the books, goes through balance sheets and everything else and does all that due diligence. And sure, you could hold on to that. I put very good odds you can have a reaction when that gap is backfilled. But as I mentioned that day, now that we were in the gap, you could raise stops and let it run because that's how it works. Got into the gap. Once gaps are earned, they're usually backfilled. Probably won't go straight up. Could do it. I don't know. All I know is that, you have a 30% profit. You don't want to turn it into a loser. You just set your stops where? It's tactically, I always do. There's a consolidation zone. So it will probably, at most, if it pulls back, want to test there. There's a gap right there from the other day. The gap up that took us above T3. And you probably won't get that. There's a lot of momentum. I read another article. All these JCLs right now in the media, Johnny come lately, are telling you today and yesterday, I saw, and recently why you want to buy UNH. I was telling you here before it broke out, there was your buy point. And again, that's just technical analysis. Doesn't, I'm not going to compare myself to Buffett. He's the GOAT, no doubt about that. But he also has a different, much, much different trading style. He will buy this stock and go deeply underwater, 20, 30%, where most won't hold if he believes in it long term. And he'll keep adding to it. That's, the swing traders, we're not trading off fundamentals. Again, I will factor them in and talk on them. In that video I did on when I first covered Smith and Wesson, I must have spoke for 10, 15 minutes talking about the changes with to the federal tax stamp and breakdown, and talked about how much of the what percentage of sales the suppressors and these other firearms contribute to Smith and Wesson and as well as Ruger. All right, so there it is. So now it's good for so far and still going about 42%. So yeah, absolutely. And also, guys, keep in mind, look at these 200s are going to come in just a little north of there. So if it wants to punch through the gap, it's probably not going to go very far to the seller step in. Here's where it took out the 200s. You can see boom, 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 rejection. Tried to get above them. Every now and then you'll do that. That's a big stop blowout. Sucks in a lot of longs, and then boom, their stock fell from there. And once you're below the 200s, a clear bear market in the stock happened. So all I'm trying to tell you is there's a mountain of resistance up there, and Warren Buffett or not, that's where you really probably just want to book profits and not even, you can raise stops tight. That's what I'll do sometimes if I think it might punch through there and run, but you don't want to give back too much. All right, enough on that. One more reply, kind of a multifaceted response. Well, it was a multifaceted question. That was today, or was it yesterday? There's 3 comments here. Yeah, here it was today. So I threw out Carvana for you. By the way, a link here. So You guys can read up on this. This one has fundamentals in there for me too. So I could sit here and talk. I'm not an expert in the automotive industry, but Carvana, I'm not going to go so far to use the word Ponzi scheme, but I and others believe, and it was even Hindenburg right before they closed doors, put out a an expose on Carvana. Hindenburg, the famous short seller, um, and I know for a fact they take in questionable cars. I was just talking to my son when he was home from college. His good friend, he had a BMW that he had just modded the hell out of. We're talking exhaust, catalytic converter gutted. The thing, and he ran it hard, put it away wet, and the thing was literally gushing oil. They came, he got top dollar trade-in value. They put on a flatbed. They don't even look at it, give you top dollar. And I've heard that repeatedly online. You can check this. So there's something going on there. And I know they make their money on financing. I am aware of that. They, and they offload a lot of the loans. However, that is a car dealership. Most of you know who Carvana is. You can click on this link, and Tricolor filed for bankruptcy. They're kind of doing the same thing. Carvana will give just about anybody a car. Tricolor was doing that too. Their niche was lending to the illegal I'm sorry, careful my words here. The undocumented, quote unquote. That's an article. Hispanic community. People with very bad credit because it was all in the ESG funds. Fifth Third Bank just wrote down, I think, $200 million on it. And so, anyways, they went belly up. They own car dealerships throughout the country. Again, selling kind of that niche to, and also the same kind of thing, taking in jalopies, and in many cases not honoring their warranty. So I just encourage you, if you want to read up on it, Reddit has a good source. The thing about Reddit, it's kind of pure and raw. Mainstream media is going to kind of spin articles, take money from certain sources to make an article look good. We know that's always going on. Reddit's kind of, and there's plenty of threads on Reddit. So Carvana, to me, is very much a fundamental play as well. But this might be the catalyst. And I'm seeing increasing, you can look at the Federal Reserve data and all this. The low-end consumer is starting to default. We're starting to see, I'm seeing in my local market, houses going into foreclosure. I haven't seen that, goodness, since I can remember. So there's some cracks going on. But again, the stock market and the economy quite often have nothing to do with each other. Right now, the stock market's going up primarily, and again, this is not subjective, it's factual, based on AI trade and those big companies. But then you have these other, again, we just had a car dealership go declare bankruptcy, and so we'll see. Again, like any trade, it's a take it or leave it. It either works or it doesn't. So don't put it all in there. Carvana is a high risk. The profit potential on Carvana is huge. So, I used to always, and I haven't done it lately. If you want to know, just let me know, and I'll give you a suggested beta adjusted position size. That's just a term I came up with years ago. And there's even a calculator on the site that'll help you with it. And it just means if something has a higher beta, or you can look at the ATR as an indicator that shows you average true range. I've got it on here somewhere. How much the stock tends to go up and down in a day. Here's ATR right there. It just gives you an idea there. And you can look at or just measure these. If you took this short trade, I just added a little support resistance level there. I'm going to take it away. So if you shorted this on the breakdown, T1, if hit, it's going to be an 11% profit. T2, where I expect a good reaction and will most likely be covering, is a 20% drop. T2 is also going to come in, as you can see here with these 200-day moving averages, a simple and exponential. If the stock starts to fall, they'll level out a little bit, but they should come in just below T2. So that's, this is, those are arrow breaks. Arrow breaks there, reaction 1 most likely. T2, probably another reaction. If you get a bounce back to T1, reshort, and hold out for a break of T2 and then T4. So bottom line, it either works out or it doesn't. If it doesn't work out, again, this is where beta adjusted position sizing comes in. That's 11% loss or more, depending on where it closes that day. Stop above 400. So you're risking 11, but to make 35. So very nice, favorable RR. And, I'll be honest with you, if that happens to start to play out and the market finally rolls over and takes out the 200s when it happens, this one has a lot more. I've given you these long-term targets. In fact, this is just kind of just like the stock market, a continuation trade. We had a top here that had the potential to be the top. This is Carvana Weekly, if I didn't mention it. There's a beautiful uptrend line, big old rising wedge with a subtrend one there. We shorted it before here. That hit T1. But what happened on April 7th? Comment section. I posted, right that week. That was the week, covering all shorts, going full long for all the reasons stated at the time. So the market, everything else, it was kind of, you can't be more confident that you're going to have a bounce, not just a reaction like a pause by those statements. So we bounced just like the market, carried up, and made a marginal new and still very much divergent high. This was our divergence at that previous high. You can see the indicators continue to diverge. And so this is still a target that I believe will be hit in the coming year or two. And if so, again, we're not going down this far, most likely, unless the market rolls over and starts to trigger some of the longer-term sell signals, long-term trend indicators. That's an 84% drop in Carvana. If you're saying, oh, Randy, you're smoking something, what do you... this time it dropped 99% there. This time it dropped 81%. This is where my beta-adjusted position size comes from, and what I call the know your security rule, know what you're trading. These are just run-of-the-mill moves. The ups are much bigger. It's like trading the stock market on steroids, and the downs are much bigger. Those are the trends. So anytime you're trading a stock, whatever it is, be it Pepsi or Carvana, just take a look at the long-term chart and see how that stock tends to trade. You go into recession, you're going to see car dealerships like Carvana and some of the other ones go down. And again, Carvana, I believe, will ultimately come out. They're cooking the books one way or another. And again, you can read up on it. And there's good insight from people that have worked at Carvana in these Reddit feeds and tell you what they're doing there. And however, they're, for whatever reason, they're just keep reporting, strong earnings. And then one day that stops and things go the other way. I'm just kind of doing what I do, squirreling here and going off on a tangent because when I click Carvana, it brings me to the automotive sector, auto and truck dealerships. And there's PAG. There's a 1, 2, 3, 4, and finally breakout right there. If and when this fails, that's going to be a very powerful, very bearish event if it fails that breakout. You had a brief breakout there, failure. It took you all the way back to the 200s. Do it again, I'll bet you it comes all the way down here to that bottom of this trading range. So I'm going to give you right now, we'll revisit it later, T1. All right. That's not T1. I should be clear on that. There's going to be other stops along the way. There's going to be a stop right there. So that's going to be T1 and that's going to be T2. And I wish I had a better trend line. Best thing to do is wait for a solid breakback below 188, and then that's going to give you a drop of a profit of about 9% and then 20%. CarMax I already covered. This was one of the most bullish ones I saw recently in one of the videos I would have given you back on. Looks like somewhere around that time, the end of July, early August, I gave you 4 potential targets. I'm not so keen on these others being hit now, especially with some of these car dealerships starting to roll over. We already hit that first target. It was a breakout of this bullish falling wedge that was good for top of T1 zone, about 11%. AutoNation right there, ready to crack, still at multi-year highs right there. What's the one that just buckled I gave you the other day? CarMart, yeah, that's what it was. CarMart's a good example. This one put in a divergent low, was bullish, took out the 200, started a rally, but it was a bear market rally. And bear market rallies typically only go so far before they resume. Okay, so back to this comment. Some good questions. Okay, a couple questions. Technicals aside, if the Fed lowers rates one or more times this year, bottom line, isn't that bullish for gold and Bitcoin? We know with about almost is near certainty that they're going to cut at least a quarter point next week. So we know there's going to be at least one, maybe more. Isn't that bullish for gold and Bitcoin? Um, Bitcoin coming up on historically its two most bullish months of the year. I know you're bearish, but how about the technicals? Well, let me do this. I answered these in order here. So where is it? One. Okay, one. So that first question about Fed lowering rates, and guys, this is important. It's a great question, but here's the answer. That depends. In a vacuum, yes. When the central bank of a country lowers its primary lending rate. A central bank is the Federal Reserve in the United States, the BOJ, Bank of Japan in Japan. ECB is a European central bank, etc. When they cut their primary lending rate, that typically causes their currency to drop. However, the dollar nor any other currency doesn't trade in a vacuum. Rather, its value is relative to the basket of currencies it trades against. Okay, so my point in case here, in this case, in the case of the US dollar, the euro makes up a whopping 57.6 weighting in the dollar index. As such, the Fed could cut, and we know they're going to cut at least 25 basis points, but the ECB, which also cut within days, they have their meeting right around the same time we do. If just say, for example, I'm not making this prediction, but if the ECB were to cut 50 basis points more, especially if it wasn't already expected or priced into the market, then the dollar would likely rise instead of fall. So once again, normally when a country cuts its rate, we have lower rates, money is going to move to another country with higher interest rates, right? You're going to think about going to, you have two local banks across the street from you. One's paying you 2% on a savings account. The other one's paying you 4%. Which one? You can pull your money out probably and put it in that 4% if it's that easy. That's what happens in the financial markets. It's very, very simple. However, again, things don't happen in a vacuum. So it's not, net, if the dollar rallies, bottom line, a rising or falling dollar is net. That's the operative word, net, but not guaranteed to be bearish or bullish for gold and Bitcoin. I've covered that many times in the past. I'm not going to get into it here. You can take my word for it. I've showed you charts. It's a simple fact because gold we're trading it here in the U.S., that is priced in U.S. dollars. So is Bitcoin in U.S. dollars if you're buying Bitcoin in dollars. So when the dollar strengthens, it takes fewer dollars to buy an ounce of gold or a unit of Bitcoin. And when the dollar falls, it takes more dollars. That causes the price to go up. Again, that's in a vacuum. That's net. Sometimes you can see a falling dollar and gold doesn't go up because of overwhelming selling pressure. But if you freeze supply and demand, if it's constant, same amount of buyers and sellers at any point in time, what I'm explaining here is an immutable force in those things, those assets, that are denominated in dollars. So, and that's it. So we'll see. And so I went on to say, it's best to use the charts of the dollar, euro, and yen. The yen, by the way, is the second largest component. It's only like 13 point something percent. The euro is a big one. To gauge where the dollar is headed and then factor that into any analysis of the precious metals and Bitcoin. So let's look at the dollar index. And so, yes, starting back here, I became net bullish on, we even had a shot that didn't pan out on a GDX short. But since then, that didn't pan out. I'm waiting to re-engage those. Most likely both on Bitcoin and gold and the dollar. And the next trade will be a short trade based on where they are in the technicals and my outlook here. We had this rally up, hit that first target, and I'm still maintaining the second target, but I don't know. See, the dollar's kind of going sideways right now. And again, I talked about this yesterday. I talked about it quite a bit recently. What's going on right now is interest rates, even long-term rates, this is the yield on the 30-year bond, have been falling in that expectation of a rate cut. That's usually what happens. 99 out of 100 times for the past century since the Fed's been around, When the Fed cuts rates, long-term rates go down as well. Oh, I had a phone call there. I had to take it. So, yeah, that's what's been going on, and that's usually what happens when Fed cuts short-term rates. Long-term rates will usually follow. Various reasons for that, but one of which, not just because the Fed's cutting short-term rates. Remember, they only control the overnight lending rate that banks can borrow directly from the Fed or from each other. Well, the Fed is really what they do, and then they have the discount window as well. Federal funds rate and discount window. Those are short-term rates. But usually long-term rates are going to fall. And it's also because the Fed will only cut rates typically when there's cracks in the financial system, some problems systemically, or they see growth slowing down and they're worried about a recession coming. And so therefore long-term rates are going to go down, pricing that in lower, slower future economic growth and lesser inflation issues down the road. So that's what happens. Again, 99 times out of 100. It's what even happened, and this is what I want to point out clearly. The last time, this was 100% priced in, that they were going to cut rates at the September 18th meeting. So remember, this is a year ago. They're meeting next week, right on the 1-year anniversary of the last. This was a start of a rate cutting cycle. It was followed up by 2 more rate cuts, 50, 25, and 25 basis points. Same thing as the market always does. It knew, as time went on, the odds went higher and higher that the Fed was going to cut rates, which they did. But then something different happened. Rates exploded higher. They continued higher. The next meeting, they went higher again, had a little blip, but then higher again. And on that third rate cut, higher yet. This is where the Fed, as I mentioned at the time, the Fed lost control of the bond market. I don't know if it's going to happen again. I honestly don't, and I don't have, as I've been telling you, a position in treasuries, but it's certainly possible. It's happened before. We had hotter than expected CPI today. Remember, the PPI yesterday was cooler than expected. CPI today came in hotter than expected. So did some of the unemployment numbers, worse than expected. So we'll see. And my thing is, I'm going to wait and let the market show its hand next week before deciding to engage crypto and or the metals. But I can tell you, oh my, the downside potential should we start to see long-term rates go up, the dollar start to rally. And you look at GDX. This thing's gone parabolic, and I look at especially some of the individual miners. This is the 800-pound gorilla in the sector, Newmont, and look at that trend line. I have an alert set. Big wedge, negative divergences on there, and this thing won't even blink, won't even bat an eye, and it'll come down to this level, I believe, and that's a minimum and first target. That's going to be a 10% drop, and I'm going to go so far to say if you wait a day or two to get in, you'll probably have missed out most of that move. So there it is, calling for a 10% drop once that trend line breaks. My confidence is getting up there. I'll tell you right now, I'll probably start a starter short position on the miners before the next week. And now there'll probably be some nervous profit taken too on these because of that. So that's why I want to get in first. Again, a starter. There's AEM, the second largest, says by market cap, and second largest holding or component of GDX. Again, measured by market cap, not by, I didn't look at GDX's weighting in these guys. I just have my watch list to the right, and it shows their market cap valuation. This is WPM, Wheaton, minor trend line, larger trend line. I'll have to mark these charts up with some more specific targets, but I think this one probably come down to about there. Look at this, FNV. I mean, these guys just have a lot of hot air in them. But anyways, let's move on. Okay, so just to follow up on a few more trades, let's do the nat gas. Still very much like it. In fact, it did take out this trend line. I think I gave you this on the daily chart before. We had this big divergent low. I remain longer term bullish. We broke this trend line. We're getting a correction. And so here's an example. If you're in this one, or You didn't take it when we took it here. It's already rallied up. We were up as over 11% through yesterday, the day before. It's pulling back. So if you only took a starter, this is where you add. It's not a super great support level. That's even better, but I don't think we're going to get there. This is a constructive pattern. So this is a time when you get a pullback. And remember, again, know your security. This is a run-of-the-mill pullback, 6%. It's also coming off a run of about 14%. So that's about a typical 50% fib retracement there. And this is a good time to add. You don't want to chase it when you're at resistance. You want to buy pullbacks on a stock. And so either way, and I do have nat gas futures at a decent support. I gave you, when I first laid out the trade, I also gave for the futures traders the NG chart. This is it right there. I had dual trend lines, one there, one there. There was our breakout. And we went up, reversed just shy of that 3,229, 323 target I gave you right there. But look, we pulled back on futures to this 2,996-ish level. And, these are additional support levels just below. So this is your re-entry zone right there. And you may want to be no-go there. If it does add, it might want to punch through and take out and test, make a new low. If it does, it'll still be a divergent low. I'm still longer-term and intermediate and even short-term bullish on nat gas. Again, I like nat gas right now, obviously. Another one is GF. I told you yesterday, I believe it was. I highlighted we hit my first target. That's where I expect a reaction. That's a reaction. And, any little bounce, it's a couple percentage points, but not much. But we've already come in. We've had multiple sell signals. This is my second target I gave you on this chart. I also told you I see the potential for a much bigger drop on the longer term charts. So you can short back, add back a short. If you covered on T1, you can add it back anywhere here up to, but not above that level. I wouldn't want to see it go above 352. So there's your re-short entry zone. And again, you can juice a trade. I do this very often on a trade that might be a 20% total from the initial entry to the final target. But when I have multiple targets, and if you're able to game those bounces, either sidestep the givebacks on your profits, or even better, turn around and turn those counter trend pullbacks into a profit by reversing the trade. Meaning if you're short, you go long, cover the short, go long. Easy to do in interactive brokers because it's a single trade. If you're short, 5 contracts at GF, you place an order at that, just above that support level to buy 10. You don't have to say you're buying to cover. They just know if you have 5 short and you purchase 10, it's going to cover the 5 short and put you net 5 long. It's very efficient for active traders, and that's when I say reverse, that's what I mean. If you're long a position, you hit resistance, you reverse the trade, game that pullback, and then recycle back in for the next move up. That's it. There's a lot of trade ideas floated out there. Novo, I'm just still holding off for now. I told you to re-enter. Gonna see, they just announced their restructuring yesterday, their job cuts, so I knew that was coming. And initial reaction in the market was positive, but could be dead money for a while. But I tell you, if it can power up and take out that T3 level, remember we have a big old gap to be backfilled, a lot like UNH, and we need to get in there. Technically it entered the gap there, but we also had this reaction low right there, and that's what came into play. And that's why my fourth target was there. Fourth target was hit. So there's T5. So again, there'll be a time, I think, to re-enter. I'm just not sure if it's quite yet. And when I tell you I like these, the PPO, you can look at the 0 line. I actually have a little purple line. I put a slightly different level there, -72. So just below the 0 line. And it does a great job of acting as a trend indicator on Novo. Meaning when the PPO, I didn't do that. When the PPO signal line, again, the white line, last of the 2 to cross, is above, it's a bullish trend. You want to be long and strong. When it starts to crack below, especially when it's clearly below, it's in a bear trend. You want to short, and you short rallies back when that PPO line, that white line, signal line hits there. Now, here was a trend, popped above, and there was a nice counter trend bounce. It was just a bear market rally. But you can see right now, I'll zoom in, the PPO is curling back down. And it's below, it's back, it just back tested my negative 0.72 level, and it's turning down. So we could have another run at those recent lows. And then I will be revisiting this stock for a longer term. Longer term, that's the case we made. We went long here at the lows recently, went up. Oh yeah, and I gave you long-term targets, didn't I? And there it is. Yeah, that makes sense. I haven't touched or changed these since I gave them to you. That was created back on August 6th. We hit perfectly. I have it at 58.46. I always say sell a little below the actual resistance level there. We had a high of 58.34. That's about exactly where you want to exit. It also coincide with the chart on the target on the daily chart, T4. And that's it. So pull back, and at some point we'll recycle back in. This is still very good long support. If I thought it was here when we bought it, the fact we had such a good reaction helps to validate that as a significant support level. Then you have that long-term trend line. So at some point, whether it's soon or a little later, we'll go up. And if we take out this trend line, that's going to increase the odds we hit my second target. And then who knows, maybe I'll add additional targets. Okay, let's wrap it up here. That's enough, I think. And we'll see what happens. Again, Fed meeting next week. I don't expect fireworks in the markets. Probably just grind around, and until I see anything else, I think it's just prudent to maintain keep things maybe on the light side for the next week till the Fed meeting's out of the way, and then just keep a diversified portfolio. Long the most bullish assets, be they commodities, individual stocks, sector, ETFs, bonds, crypto, whatever. Like I said, I don't have right now strong opinion on crypto, and gold setting up GDX at least for a nice correction, tradable correction, and I think we'll know a lot more next week after the Fed meeting on that. This has been Randy Finney with Right Side of the Chart. Have a great day.